Hey everyone, welcome back to the channel. Today we're diving into a question that could shake the global economy to its core. What if the Federal Reserve stops printing money? I know this might sound like a wild what if scenario, but the truth is, it's something we need to talk about. We've been living in an era of cheap money where the Federal Reserve has been pumping trillions of dollars into the economy. But what happens when they stop? Will we see a stock market crash? Will inflation disappear overnight? Could we face a new recession? Or even worse, a depression? By the end of this video, you'll understand exactly what's at stake. So buckle up because this one's going to be eye-opening. How did we get here? So before we jump into the consequences of the Fed stopping money printing, let's take a quick trip down memory lane and understand how we got here in the first place. The Federal Reserve, aka the Fed, is America's central bank. Its job is to keep inflation stable, ensure maximum employment, and basically make sure the financial system doesn't implode. To do this, the Fed has a few tools at its disposal. First is setting interest rates. Higher rates slow down borrowing, and lower rates encourage spending. Second is buying and selling government bonds. This is to inject or drain money from the system. Next is quantitative easing, which is a fancy way of saying printing money by creating cash out of thin air and using it to buy financial assets. This last one, quantitative easing, is what really changed the game. After the 2008 financial crisis, the Fed started printing money like never before. And during the pandemic in 2020, they took it to an entirely new level, injecting trillions into the economy. So for over a decade, this flood of cheap money has created booming stock markets, rising real estate prices, and a golden age for investors. But it has also led to asset bubbles that include stocks, crypto, and real estate that skyrocketed because of all the easy money, debt addiction. Companies, governments, and individuals borrowed like crazy because interest rates were so low. Wealth inequality. The rich got richer as their assets increased in value, while wages didn't keep up. And in 2021 to 2022, we saw inflation hit a 40-year high as too much money chased too few goods. So the Fed realized they had a problem. They couldn't keep printing money forever. That's where things get interesting. So what happens if the Fed stops printing money then? Now let's fast forward. Imagine a world where the Fed slams the brakes on money printing. What happens next? A, there'd be a stock market crash. Let's start with the obvious, shall we? The stock market would take a massive hit. The reason? Investors have gotten used to easy money. When the Fed prints money, a lot of it flows into stocks, crypto, and other assets. But if that river of cash dries up, stock prices would fall sharply. Tech companies, meme stocks, speculative investments would be hit the hardest. Retail investors who went all in on stocks and crypto might see huge losses. So in short, a market crash would be highly likely. If the Fed stops printing money, they'll also stop keeping interest rates artificially low. This means mortgages get more expensive, housing prices could drop because fewer people could afford to buy. Businesses struggle. Companies that relied on cheap debt would find it much harder to borrow and expand. Consumers cut back. Credit card debt, car loans, and student loans all become more expensive, leading to less spending. All of this would slow down economic growth and possibly trigger a recession. So one of the scariest consequences is a massive debt crisis. Remember how I said that companies, governments, and people have been borrowing like crazy? Well, what happens when they suddenly have to pay back those debts with higher interest rates? Zombie companies, businesses that survive only because of cheap loans, would go bankrupt. Real estate developers could default on loans, leading to a potential housing crash. The US government itself would struggle, as it has 34 trillion national debt that becomes way harder to manage. If this happens on a large enough scale, we could see a financial crisis rivaling 2008. But here's a twist. If the Fed stops printing money, the US dollar would likely get stronger. Why? Less money printing means less inflation, which makes the dollar more valuable. Investors around the world would rush to buy dollars as a safe haven. While this sounds good, it actually comes with problems. US exports become more expensive, hurting American businesses. Developing countries that borrowed in dollars could face economic collapse as the debts become harder to pay. Global markets could become unstable, causing international financial turmoil. So while the US dollar would strengthen, it could set off a domino effect of economic pain worldwide. So, could this lead to a recession or depression? The big question is, would stopping money printing cause a recession or something even worse? A recession? Almost certainly. When the Fed tightens monetary policy, businesses slow down, unemployment rises, and then people would spend less. A depression? Not impossible. If debt collapses, markets crash, and panic spreads, we could enter a deep economic downturn like the Great Depression of the 1930s. This is why the Fed is in such a tough spot. If they keep printing, inflation could spiral out of control. But if they stop, the entire economy could unravel. So how do we prepare for this scenario? Now that we know the risks, let's talk about how you can protect yourself if the Fed stops printing money. Diversify your investments. Don't put all your money in risky stocks or crypto. Consider gold, real estate, or dividend-paying stocks. Hold some cash. A strong dollar means having cash reserves. Could be valuable. Avoid excessive debt. If interest rates rise, debt will become a nightmare. Try to pay off high-interest loans now. Think globally. Emerging markets could struggle. While safer assets might be in demand, keep an eye on global trends. So in conclusion, what would happen if the Fed stops printing money? It wouldn't be pretty. We'd likely see a stock market crash, a credit crunch, a debt crisis, a stronger dollar with global consequences, a potential recession, or worse. This is why the Fed is walking a tightrope. They don't want to crash the economy, but they also can't print money forever without causing massive inflation. What do you think? Should the Fed stop printing money? Or is it already too late to fix this mess? Drop your thoughts in the comments and don't forget to like, subscribe, and share if you found this video helpful. Until next time, stay informed, stay prepared, and take control of your finances.